Welcome back, everybody, to Volatility Trading Strategies. So if you're new here, thank you very much for the support. In my videos, we talk about all things investing: options trading, volatility trading, tactical rotation strategies, risk management, and helping people make good financial decisions so we can all retire multimillionaires. And this video is one of those ones. We also do live streams every week with an open Q&A where you can ask me anything that's on your mind. So if any of that interests you, please hit that like button for the YouTube algorithm and definitely subscribe to the channel so you won't miss any future content. All right, so today's video is something that I think a lot of you are going to be quite interested in. As some of you know already, I am a digital nomad. I love to travel, I move around a lot, which means I'm quite familiar with the real estate markets in several countries around the world. One of those countries is Taiwan. I live there for several months every year and I love it. It's a great place. Convenient, the food is great, the weather's good, the people are friendly. I do speak somewhat passable Chinese, so I consider it a second home and I really enjoy it. Now, some of my Taiwan family here has recently purchased a home in a new development, and so we're thinking of buying a place in the same location. Just running the numbers, debating the pros and cons, and I think it might be fun to include all of you in that private conversation. So we rent now, and the question is, would we be better off buying? The age-old question, rent versus buy. Now, I've already done a video on this topic, I'll link it here. But for that one, I used an average of 3 Canadian cities and 5 US cities for the data. And it worked out pretty close to where some people would be better off renting and others would be better off buying. In the United States specifically, it does lean more towards buying being the better choice. And in Canada, the renters have a little bit of an advantage. I'll go into that shortly with some examples. So today we're going to go over how you can run the numbers yourself for where you live in the world, because this rent versus own question really does need to be calculated. We can't just guess and we can't go off feelings, because 30 years from now, that difference could be very big. We're talking about potentially millions of dollars. So, spoiler alert, Taiwan actually does happen to be one of the worst markets in the entire world for owning your own home. If you spend 5 minutes on Google, you can find thousands of examples of economists and real estate experts essentially saying the same thing. This article here from the Taiwan News: Taiwan experts advise not to buy a house but to rent it. House price to earnings ratio upsets youth and economists. And if we go down here, this is interesting. It says official data placed the ratio for housing prices to earning ratio in Taipei City at 15. It's actually 17 now, so it's even worse. And made CNN headlines in 2015 as one of the most unaffordable housing markets in the world. There's another one here that I pulled up from the Taipei Times. People advised to rent, not buy. Again, it's talking about that house income ratio at 17. But another thing interesting in this article, it says the average Taiwan household spends 2/3 of its income on mortgage payments, well above the affordable limit of 30%, the report said. So what they're getting at here is it's essentially considered affordable if you're spending 30% of your income on your mortgage payments or whatever your housing situation is. Anything above that and it might be unsustainable. Now, if you have a perfectly stable work situation and you really know what you're doing, perhaps you could bump that up to 35 or even 40 in extreme cases. But 2/3 is just way, way too high. Now, the reason so many experts are saying this, what we've got here is data updated for 2021, so it's recent. And we've got a list here of 111 countries where we have good real estate information for. And what I'm going to be focusing in on today, because we're talking about rent versus own, is this one, the price to rent ratio. And if we filter this one and go from worst to best, here we've got the number one worst market in the world to buy your own home in South Korea. 104.88 ratio, just insane. China number 2, but there's Taiwan at number 3, third worst in the world. We hear horror stories all the time of Hong Kong, Japan, Singapore, but actually Taiwan is worse than those ones. Now, the house that we're considering buying isn't actually in the city center, so we're going to go to this one that says outside the city center. Again, we can filter here. Ghana shows up. It's just a crazy high ratio. But again, there's number 2, South Korea, and number 4, worst in the world, is Taiwan. 63.78 ratio. I'll get into what that means in a second here, but if we go to the bottom, we get to what I was referencing before. There's the United States. It's actually one of the best in the world. Now, this may not apply for places like Manhattan, San Francisco, Chicago, or some of the other bigger cities. You'll have to run the numbers yourself. But in the United States, the ratio is still very good, and home ownership still makes a lot of sense for a lot of people. A couple of the others that are interesting to me as a digital nomad who travels the world: is this one here, the United Arab Emirates. I'm always in the process of looking for multiple residencies and places to live. And next on my list is actually Dubai. They have a fantastic residency through investment program where you can actually buy a house and they'll give you permanent residency. A big advantage as well is that real estate in Dubai is very attractive for purchasing. This ratio is very low. I'm actually sitting at my computer right now in Panama City. I did the same thing. I went through the process and now I have permanent residency in Panama if I want it. And because of this ratio, I actually don't plan to live here, but if I did, buying a home would make a lot of sense. It would be better than renting. Now, if you're looking for a good threshold number, it's typically about 20. Anywhere in the 18 to 22 range is right on that sweet spot where you really have to calculate carefully, because below 20, buying your home would probably be more advantageous. And above 20, the renters start getting the advantage long term. So for me personally as a Canadian, here we are right there. I always live in the city center in Canada, so 20.53. It's right on that threshold where renting versus buying needs to be carefully calculated. So if you want to know a little bit more about this ratio, I've got a couple of real-world examples to show here. Now, I've got a place rented right now in Taiwan. Because of the pandemic, I haven't been there in almost a year, but it's still rented. That home that I'm renting is also for sale, and it can be purchased for 40 million NT dollars, which is about 1.4 million US dollars. That's the home that we're renting. The monthly rent that we're paying is 50,000 NT or 1,700 US dollars. I'll say that again for all the people living in North America that think I just misspoke. We are currently renting a house in Taiwan, right in the heart of one of the most expensive districts. It's called Xinyi District in Taiwan, right near Taipei City Hall. A $1.4 million home, our monthly rent is $1,700. Absolutely insane. So you can see the ratio here, how it's calculated. It's essentially the price of the home divided by 1 year of rent. And you want this number to be as low as possible if you want to buy your house. In Taiwan, it's the exact opposite. It's insanely high, 66.67, very close to the national average of 64.39. On the flip side, just a few months ago, because of the pandemic, I was living in Canada for a long time, and I was renting a place there that cost 1.4 million Canadian dollars. My monthly rent, and this was actually a little bit discounted because of the pandemic, but I was paying $5,500 a month. You can see, same calculation, the price of the home divided by 1 year of rent is 21.21, pretty much in line with the national average of 20.53. And that threshold that I mentioned, about 20. Above 20, the renters are going to start to get an advantage, and below 20, it starts to make more sense to buy your home. So real-world example, there is nothing similar about buying a home in Taiwan versus buying in Canada. And remember, the United States is even a better example than that Canada example. It's actually even more skewed to being beneficial to buy the home. Same with Dubai, same with Panama. Buying that home has the advantage. But going back to that data, it's just undisputed that Taiwan, if you're buying your home in Taiwan, the way that these ratios sit, the price to rent ratio, the price to income ratios, people who own homes in Taiwan, it can take multiple generations to essentially pay off that home. If you're buying a home and renting it to other people thinking that that's some type of good investment, I'm sorry to say it's one of the worst places in the world to be doing that. The rent is just peanuts compared to the actual value of the home. It's the same in Hong Kong. You would never buy a rental property in Hong Kong. Most of Asia, you wouldn't do that. China, Japan, Singapore, Philippines, you just wouldn't buy rental properties when this ratio is so skewed against you. So now I want to actually show you my spreadsheet where I calculated in Taiwan, should I buy this home or should we continue renting? And we can probably learn a lot from it. You can change the numbers a little bit for your area, and you can learn how to calculate this yourself. I love Taiwan. Again, the people, the food, the culture, it's all amazing. But home ownership in Taiwan? All right, so I'll try to keep this as quick as I can, but this stuff is really important. Like I said, this calculation over the next 30 years could be the difference between $1 million or more, which I'll show you in a minute. So first we'll calculate for the buyer of the home. Everything in red is going to be for the home owner. And then afterwards we'll do the renter, everything in green. And I've also got NT dollars for Taiwanese people. And then I've got everything converted to US dollars, which will be more interesting for most of you. In this video, I'll just reference the US dollars. All right, so let's start with the buyer of the home. The initial price of this home that we're considering is $765,000 US dollars. So it's not an overly expensive home. That's the good part. All right, so the first thing, of course, is the 20% down payment. That's going to be $153,000. That is capital that the renter can just immediately start investing. From day one, they're already off to the races. But the homeowner has to put a down payment. This next one, before move-in renovations, this is essentially because it's a brand new development and you have to do a little bit of customization, a few add-ons. She says that it's about $1.5 million, but I'm just going to put $1 million and go even lower than that. For today's calculations, at every turn, I'm going to make it more advantageous for the homeowner than the renter. I'm always going to default for lowball values for the homeowner. As any of you who are in a relationship can probably attest to, you don't want to be accused of skewing it in your direction. So I'm going to be very generous to the homeowner today. So we'll make that $1 million. The furnishings, of course, we rent fully furnished apartments. We have all the furniture, the TV, washer, dryer, everything's included. But we will have to furnish a 3-bedroom apartment, and I'm going to say it's $34,000. And then lastly, all the fees that go along with home ownership. Again, this is going to be probably much more, but let's lowball it. And we end up with a number of $230,000 of upfront payment. That's money the renter gets right away to start investing. The homeowner has to put that upfront before you even move in. The next part, the 30-year fixed mortgage. This one, I have my doubts a little bit, but apparently you can get a 30-year fixed for 2.5%. Just take her word for it, and it's $2,400 a month for that mortgage. Now, this bottom part is where a lot of people mess up this calculation. Whenever they're measuring rent versus own, they typically do the rent versus the mortgage. But the truth is, home ownership is not free, actually very far from it. It's quite expensive. So the first one is property taxes. Now, I found some pretty accurate data that shows that property taxes in Taiwan are about 1 to 2%, depending on what articles and what websites I'm looking at. But they say it averages about 1.5. But again, I'm going to default to the low end of everything here. So we're going to use 1% annually. The next one, homeowner's insurance. Of course, that's necessary. That's just basic coverage, nothing even very high. And then the last one, maintenance and upkeep. The typical recommendation is 1% annually of the current value of the home. Again, I'm going to default lower, and I'm going to use 0.75% annually. So even the person that buys the home still has to pay $1,250 per month in recurring expenses. That brings the total all-in expenses for the homeowner at $3,668 for this home in Taiwan. Now let's see how much that home is actually going to be worth 30 years from now at the end of the mortgage cycle when you own it free and clear. So government statistics show that the average home in the last 50 years has appreciated 4.2% a year. There's many years where it's more than that, but then of course you include all the bad years. Long term, for 53 years, it's 4.2%. And I'm using an inflation rate of 3%. That's pretty close for Taiwan. So this homeowner, of course, at the start, they're going to have that initial equity of $153,000. That's the down payment, and you own that. And then from there, every month, some of those mortgage payments are your building equity. And at the end of the whole thing, we are left with a home that is inflation adjusted worth $1.26 million. I say inflation adjusted because I'm essentially taking the appreciation minus the inflation rate and then doing a geometric compounding so that we can decide inflation adjusted how much that home is going to be worth. And it's over 1.2 million. So it's going to feel like a pretty good investment. Now, side note, a lot of people miscalculate this as well. A lot of people will say, well, I bought my home for $200,000 and now it's worth $1 million. I made so much money. What they're not realizing is that the vast majority of that money is inflation. In the United States, for example, the average home has appreciated about 5% in the last 60 years. But the inflation rate is close to 4% during that time frame. So the real appreciation of real estate in the United States in the last 60 years is actually 0.9%. It's about 1% in Canada. It's about 1.2% in Taiwan. That's the real appreciation. So now let's do the renter. Now, like I said, right now we are actually spending $50,000 for our rent. And we can see the data for all of Taiwan here. The average 3-bedroom apartment in city center is 32,000 NT, with a range that goes up to 60. Now, we live at Taipei City Hall. It's right near the train station. It's a modern building. So our rent's 50,000. The place we're moving to is outside of city center, and the average actually drops to 21,000 here. At the high end, 33,000. So again, I'm going to default to as high as we can go, and I'm going to say it's 35,000 for renting this exact same home. Probably be less, but let's default to that. That's the monthly expense for the renter, everything included. That includes the building maintenance fee, the renter's insurance. That's just what we pay in Taiwan. It's crazy, I know. People won't even believe that, but that's how cheap rent is in Taiwan. $1,200 for a really nice place. I mean, in some cities in the United States, $1,200 doesn't even buy you a closet. Here, it gets us a modern, brand new 3-bedroom, 2-bathroom. But okay, here's the calculation that matters for the renter. Day one, they get to start with that $230,000. And then every month, they're going to be investing and making a rate of return. Now, I'm using 10% as the rate of return. And of course, I'm using 3% as the inflation rate. So a real investment return of just 7%. Now, for me personally, as somebody who does invest for a living, I actually get a much better rate of return than that. If we go to our non-leveraged performance here, we're coming up on our 10th anniversary here at VTS, and live trading, we're at almost 20% a year. And then we do have, for people who have a little bit higher risk tolerance, we have leverage strategies as well, where they might actually be able to get significantly more. But again, defaulting to the bare minimum numbers here, I'm going to use 10% return. This is geometrically compounded, of course, because investment returns compound every month. And so just across the board, the next column you're going to need if you do this yourself is just that simple calculation. What you started at, how much you returned that month, and then how much you're left with. Another calculation is the capital gains here. Now, if you can do it in a tax-deferred count, that might be better off for you. Pay the taxes 30 years from now. For me, I'm a tactical investor, and all of my investing is considered short-term capital gains, so I just take that out immediately. That'll be different in whatever country you are in, but I'm using 25%. It's a little bit high. Most countries aren't that high, especially if you're a business owner. There are ways to cut that down significantly. And of course, for me as a digital nomad, I'm very tax-friendly. I can get this way lower, but let's just use 25% again. Value after taxes, we've got that column. And then next, this is also an interesting and very important calculation, because that rent won't always be $1,200. If you go down here towards the end of the cycle, that rent monthly is going to be getting pretty close to $3,000. So we have to inflation adjust it along the way. I'm adding the 3% inflation every year as we go, and that renter is going to be paying more and more money every year. But remember, home ownership also has inflation. Now, not the mortgage payment. 30-year fixed mortgage at 2.5%, this isn't going to be subject to inflation. This is one of those situations where I don't care what Dave Ramsey says. If there's a bank that's going to loan you money and you're going to be paying the money back in non-inflation adjusted dollars, you should probably consider taking that offer. So the mortgage itself will not be inflated. But all the recurring monthly expenses, property taxes, are based off a current assessment. Usually every 5 years, but it's a current assessment of the value. Homeowners insurance will go up. Maintenance and upkeep, you will be paying. If you renovate your kitchen 15 years from now, you're using 15 years from now dollars to do that. So this recurring section also has to be inflation adjusted. That's the ownership inflation. And we end up with a difference, a monthly price gap between how much the owner pays every month and how much the renter pays. This money gets to be deposited in the investor's account every single month, and that's really going to accelerate the compounding. So for the renter, at the end of 30 years, inflation adjusted, adjusting for real rates of return, capital gains, everything included, they will end up with $3.15 million at the end of this process. So if we look at a summary here, what we can see is that it is quite clearly advantageous for the investment account. The person who rents and invests the difference, they're going to end up with $3.15 million at the end of 30 years. The homeowner has an inflation adjusted 1.26. The difference, nearly $2 million. All inflation adjusted. This is what it's actually going to feel like. $2 million difference. That's what happens when you get a country where the rent is so much cheaper than the price of the home. You get a situation where anybody who's a reasonable investor can potentially make $1 to $2 million more over that time frame. Pretty crazy. Now, obviously, this doesn't apply to everywhere in the world. Like we saw, statistically speaking, we are actually talking about a country that's one of the worst in the entire world. Whereas Canada, the US, Dubai, places like that, it's very advantageous. So we can actually just show you some very quick numbers here, just to give you an idea of how much of a difference this can make. So first of all, in Canada, a house of that size, outside of city limits, you could probably rent that place for something around $75,000. It would be significantly more expensive, but $2,500 a month, something like that. If we look at what that does to the chart now, you can see it's actually fairly close. And this is why I said Canada's right in that sweet spot where renting versus owning, it's not so cut and dry. Now, if you are an investor that can do better than 10%, then you're still going to be better off renting. But if you're not an investor, you're basically just going to buy and hold in some type of financial advisor pie chart, well, then at that point, you might be better off buying your home. You're going to get that value growing, and you're not really going to be doing much better with your investments. We can go over and do something like the United States. It might even be more than that. It probably is. So let's say $90,000. Let's say it's going to cost $3,100 to rent a modest home outside of city limits. Well, now, if you're an American, again, you have to calculate this because it's quite possible that home ownership might be a little bit better off. This is now a difference of $427,000 in favor of the homeowner. Now, again, if you're an investor in the United States and you actually do know how to get better than 10%, let's say you know how to get 13%, well, then all of a sudden you're going to be better off investing anyway. But these are all calculations that you're going to have to do. It's not as simple as just saying renting is throwing money down the toilet. No, it's not. It's absolutely not. That renter gets a lump sum from the beginning and they get a price difference every single month to add to their account. Plus, they're allowed to move. If the homeowner moves even once, that's going to crank up the expenses and it's going to skew it again in favor of the renter. Now, for Europeans, let's go back to the 10% just to keep it all consistent. For Europeans, it's actually also something that's reasonably important because there's a lot of European countries that are right in that threshold where renting is probably better. Now, if you live in Montenegro, United Kingdom, Norway, Denmark, Finland, there's all these countries, Sweden, see some others, Switzerland, Germany, Austria, Luxembourg. These are all countries that are in that sort of 25 to 30 rent to own ratio, or price to rent ratio. In that case, those countries, maybe this home would be 55,000 NT dollars converted. For Europeans, again, you're back to a situation where if you're a reasonably decent investor, you might actually be better off investing rather than buying. If you're not going to invest at all, right? Again, you're going to just do some type of buy and hold investment. Maybe you're going to get 7%. Then it's actually very close. Maybe just buy your home, save yourself the headache, get you the peace of mind, and go ahead and buy that home. The point being, this absolutely has to be calculated. So the last thing that I'm going to show here while I'm doing this video is my situation. Try to get a little bit closer to my current situation and show you just how skewed it is to the renter side. Okay, so let's go back to the beginning. We will be renting for $35,000. That'll be a very nice place to be. As far as the 0.75% maintenance, not to call anybody out here, but she is a little bit spendy. So I'm going to bump that up to the recommended 1%. That's typically what people say you should account for. Next is the investments. I am significantly better investor than the average sort of 7% type of person. I think I've proved that over 10 years, and I guarantee you I'll prove that over the next 20 as well. But I don't want to get too crazy with this, so I am going to say just 13%. Again, I'm extremely confident I'll do far better than that, but I don't want to make it too crazy. Again, skew it for the buyer. Now, capital gains, as me as a digital nomad and somebody who can actually optimize my tax situation based on multiple residencies, and I'm a business owner with write-offs, with actual business expenses, I can easily get this down to about 10 or 15%. Probably 0, to be honest, but let's just say 10 just to err on the side of caution. And now what we're looking at is a pretty skewed situation. The investment account could grow to potentially $7.5 million, where that home is only going to be 1.26. For a savvy investor who can get 13% return on your money every year, you might be giving up $6.3 million if you dump that money into a home instead of just renting and investing the difference. Absolutely enormous difference long term. Data, statistics, mathematics, these are here for a reason. If you want to make those good financial decisions and retire a multimillionaire in the future, we really do have to carefully calculate these types of things. The difference is huge. And for all my Taiwanese friends out there, love the country, love the people, can't wait to get back there. But as far as home ownership, I hate to be the bearer of bad news, but you are actually living in one of the worst markets on the planet for buying your own home. I can almost guarantee you that you'd have far more money 30 years from now if you rent where you live and you invest the difference to grow your money much faster. You'll hear that from investors all the time. The common saying is, own what you can rent to others and rent where you live yourself. That's how you maximize your capital. Now, having said all of that, the decision on whether we're going to actually buy a home or rent, we haven't actually decided yet. This is something that everybody's going to have to decide for themselves. Obviously, the numbers are terribly skewed, and it's a huge waste of money to buy a home in Taiwan. You could just rent for very cheap, but there is that wild card factor, and I know a lot of Taiwanese people feel it, is that sometimes they feel it's just more peace of mind to own their own home. I guess the decision they're going to have to make is that peace of mind worth millions of dollars to you? I can't say for sure. You're going to have to decide for yourself. So if you like this type of analysis and you want to get more specific to investing, you want to figure out how to make that 13, 15, 18% return, head on over to my website, claim your free trial, and see what the VTS community is all about. I think you'll like what we're doing over here. So thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS Investing Community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.